Alright, part 3, or basically learning objective number 3, is tackling filing one of the formulas that we do have on the tax return. Awesome thing about tax returns, if you ever look at the 1040 or any of the schedules, it has lovely instructions and it actually tells you word by word of what to do with certain things. Problem is, we have to know what those things are. So we're going to start off first with the tax formula for individuals on your 1040. First thing that we're going to have is gross income. Then we're going to minus deductions for AGI, or adjusted gross income. Mostly you're going to hear AGI. This will equal to AGI. Yes. Then we're going to minus what is the greater of our itemized deductions or the standard deduction. For most tax individuals, it's still going to be the standard deduction. We're going to go over those later in this chapter of how much those are. We'll have minus qualified business income deduction if we do have a Schedule C and a business, and this will be our taxable income. Now, from this taxable income, after all these deductions that are happening, we're going to multiply it by the tax rate using appropriate tax tables or rate schedules, which of course we'll show you how to do. After that, this means basically our gross income tax liability and additional taxes. Okay? And then we subtract the last and awesome thing of what we know as tax credits and prepayments. And if the number will show us after that is if we still owe money or we get a refund. Now if it goes negative, should be a refund. If it stays positive, then we're going to owe tax. Yay. I think the refund would get a bigger yay. Yay! Refund! Woo! Now, honestly, as a tax professional, if we have this client for a year and we're able to estimate their taxes, honestly, the refund should be almost close to zero because we got them mostly their money before the tax return. But either way, people love refunds. I will also tell you, as a tax professional, if they do owe tax, you better have some thick skin. So let's go over some of these. Starting first with gross income. Now, gross income can be tied to the following and is reported directly on Form 1040, not one of the schedules. And this can be wages, interest and dividends, pensions, Social Security, capital gains and losses. Also, income from a business, rental income from Schedule E, but all those incomes are actually put into Schedule 3 or Schedule 1. So really the only ones that are directly on Form 1040 are these. Now, deductions from AGI. Now these can include certain trades or business expenses, certain reimbursed employee business expense paid under an accountable plan. That is very, very specific on that. We've been hit pretty hard on deductions on those. Remember that. Pre-2019 alimony payments. Student loan interest. Yes. The penalty on early withdrawal from savings. Ooh. I don't know how that's a deduction there. That's a penalty. That seems a little odd to be right there. Uh, Contributions to qualified retirement plans. That's a good one. And then certain educator expenses. Yes. Now, AGI is usually referred to sometimes as the magic line, since it is the basis for several deduction limitations. You're actually going to see as we move through the course, we're going to use AGI basically as our starting goal. And if their AGI is bigger than this or smaller, then we would follow the right directions. Mostly, yeah, AGI is our big thing. So, we love adjusted gross income. You're number one in our books. You are the magic man. Oh, magic line, sorry. Thinking of the song. Alright. Standard deduction versus itemized deductions. Okay? This is the following table of standard deductions amounts for 2019. Even though this is a 2021 book. Okay? So, single is 12,400. I think they probably meant 2020. 12,400. Married filing jointly is 24,800. We have married filing separate, which is pretty easy. It is half of married filing jointly or the single rate. Then, of course, we have head of household, which we'll get into these statuses too. That is 18,650, and qualified widower is 24,800. Yeah, I think they meant to put 2020 in the PowerPoint. It's just how it goes. No worries. But yeah, qualified widower, that's a nice one. We're going, like I said, we're going to get into the statuses later in this chapter, so that's going to be a different video. Now, you also get the additional amounts for blindness or over the age of 65. First off, unmarried taxpayers get 1,650, and that is blindness or over age 65. So if you're both, you get two times that 1,650 for unmarried. Now, if you're married, it's a little bit less, just a little bit, because there's two people that gets it, or could be, because it's either or for that one spouse. So if only one spouse is blind or over the age of 65, they get the 1,300. If both of them are over 65 or blind, they each get the 1,300. Plus, if they're both of blindness and over the 65, double it. Same thing. And of course, surviving spouses. Okay. Not bad. Not bad, they say. Alright. Exemptions. Now, prior to our good old friend, the TCJA, taxpayers received a deduction called an exemption for themselves, spouses, and dependents. This is that personal exemption. The exemptions for suspending started in 2018. Now, interesting thing about a lot of tax laws, they're only going to be around for certain time, and this one is scheduled to end in 2025. But, well, it may not always be that case. as laws can still be extended. So, if the IRS or in Congress, the whole government, if they like not having this personal exemption, they would actually push back the date. So, it's always tentative. That's why, as a tax professional, you have to stay updated to the laws. We wish we were the law, but the government comes in and goes, I am the law. And I'll tell you how you're going to deduct this. Yeah. So, always be tentative on any way that laws will end. We also have the gross tax liability. Okay? And this is obtained by referencing to the tax table that's usually provided by the IRS or by using of a tax rate schedule. Again, pretty much given to us by the IRS, as these can change. But it's okay. It's fun. We like it. We keep going on about it. It brings a good challenge. The awesome thing is, if you have tax software, you don't have to look up these tax tables. They're automatically programmed. But, of course, since you're taking a tax course, you get to do that manually. Yay! Alright. So, we have a self-study problem. We have Bill. Is a single taxpayer, age 27. In 2020, his salary is $29,000, and he has an interest income of $1,500. In addition, he has deductions for a just gross income of $2,200, and he has $6,500 of itemized deductions. Calculate the following amounts: gross income, AGI, standard deduction or itemized deduction amount, or taxable income. Yes, Batman. So, again, since this is a problem, go ahead and pause the video and see if you can solve these little items. Alright, so you ready for this? These are the answers to the problem as it states, and it's nice and going. With gross income, one, we do count his salary of that $29,000, and we add on the interest income. Remember, we do file interest income if it's $1,500 or above on the Schedule B, which ports over to the 1040. So his actual gross income is $30,500. Okay. Next, adjusted gross income. Now, it actually tells us we have deductions for adjusted gross income of $2,200. So we need to subtract that from our gross income. That's where we got right here. So subtract is $28,300. Now, going back to our standard deduction chart for 2020, we have single gets $12,400. And here we get to choose the greater. They say we only itemize $6,500. So the greater of the two is, of course, standard. So to figure out his taxable income, then we take AGI and minus that standard deduction, which gives us a total taxable income of $15,900. Okay, and that's it. That's all for figuring out a little bit of math. I know we love math. If you don't love math, then you're probably not gonna be a tax accountant. But you gotta love laws and you gotta love research. A little bit of this, a little bit of that. Knowing how to do customer service, definitely. But either way, um, if it was easy for understanding, yay. Guess what? We're going to make it more complicated because that's how taxes are. But if you get the basics down, it makes it a lot easier. Especially also memorizing this table of what the standard deductions are. And of course, they come out every year. So usually they do increase every year, depending on how much Congress would like that increase. It's usually to adjust for inflation and state of living a lot of times. But either way, that's it for this learning objective. So again, if you have any questions, please let me know. And you know I do that at the end of each learning objective. Alright, so I will see you for the next one, which y'all saw a couple of previews of, is Who Must File?